All right, so let's begin the show. And usually we look into our viewers' financial portfolio, but then today we are going to talk about mutual funds financial portfolio, or what are the fund houses buying or selling, and what can we decode by their buying and selling strategies. To discuss more on this today, I have with me Shweta Rajani, Head Mutual Funds, Anand Rathi Wealth. Shweta, good evening and welcome to the show. So let's deep dive into what mutual funds are adopting as a strategy, in terms of what sectors and stocks are they selling and what are they buying, where is the trajectory and more confidence. But just to, begin with, Shweta, I want to understand, or, you can just help our viewers understand as to when a mutual fund is buying or selling a particular kind of exposure in a company, or a particular kind of market cap that they are looking into. What does this indicate usually? And talking about this specific market, where the market is very volatile, what is that common trend that you are witnessing? We will be diving deep into what stocks and what companies they are selling or buying, but then what is one general trend that you have noticed in this case?
Sure, Kavita. Thank you so much for having me on the show. And like you were saying, just to see what is the general trend in the market. What are fund managers generally, the themes of the sectors that they are playing is, I would say, uh, given that the budget focus has also been towards power, innovation, infra. So we are seeing that trend, where fund managers are looking at segments or themes which could benefit from this. So it could be industrial products, it could be infrastructure oriented products. What we are also seeing is a shift that's taking place from the traditional banks to
I think there is some kind of a technical issue, but then as Shweta was explaining, a common trend that we've seen as far as mutual funds are concerned, the kind of additions that has been noticed is mostly in healthcare, industrials and utilities. And we are talking about a January data over here, and talking about specific stocks, HDFC Bank, Vedanta, SBI, ITC has been those stocks, top stocks where we've seen mutual funds going ahead and buying. And as far as the sell calls are concerned, we've seen most of them selling NTPC, Zomato, ONGC, ICICI Bank, and BEL. So these are the typical counters where overall, in a nutshell, we've seen mutual funds making a buy call and a sell call. Okay, so we have Shweta back, and Shweta, there was some technical error. We couldn't hear you properly. Could you please continue?
Yeah, sorry for that glitch. I was basically saying that what we are seeing, the fund managers doing is the focus this year seems to be that there could be a boost in the rural consumption, and therefore, what could benefit from that. Also, there's a shift from traditional bank ownership to fund managers looking at buying financial institutions, fintech. Also with the government boost on capital expenditure, power, innovation, there is some segment of buying that we are seeing over there. That's from a sector or a theme specific, but also what we are seeing is fund managers possibly shifting a little bit from that small cap booking profits and categories where they have flexibility. We've seen them doing some amount of profit booking there.
All right, Shweta, looking at the volatility in the market, and obviously, what we can also see from the buy and the sell calls is that mutual funds are also looking more towards large cap. Is that something that you are also noticing in terms of their stock calls and company calls?
Yes, so we are noticing that trend. Like I was saying, that small caps have seen almost a 60% kind of a run up. Large caps, broadly at around 25%. So a lot of these fund managers who've booked their profit, who've made good profits, are booking that and shifting towards the large cap oriented companies. So what happens is, for a fund manager, when he's triggering a sale, it's either that he had a certain valuation number in mind for a company that's played out, so he wants to book those gains, or it could be an earnings number that he had in his mind and that target has been achieved, and they think that going forward, potentially it could not play out the way it is. That could trigger an exit. or somewhere where he's gone wrong and he wants to correct his decision. So these are broadly the reasons why they make those changes in the portfolio. But you're right, from a market cap shift, we are noticing fund managers making that shift in their portfolio.
Shweta, let's focus on small caps over here because you're particularly the kind of stocks that we are seeing. Any specific reason why there has been a sell call from CSE, South Indian Bank, Engineers India, and SGVN and IEX that we've seen what mutual fund houses are initiating?
Yes. So, like I said, some of the times when the fund manager is exiting, it's either because he had a certain valuation, a number in his mind for the company that played out. So he wants to shift where there is a better opportunity available. That generally triggers them exit. Plus, within the small cap universe, if you see, the generic feeling is that it's an over expensive market. But honestly, when we look at bits and pieces, there are segments of companies where it's frothy. There are companies or segments where there is enough upside still over there. The valuation attractiveness still remains. So those are few of the calls that we are seeing that the fund managers are now executing on their portfolios, which is where some of these exit calls. It's not that there is a sector concern over here, because these sectors have good potential. It's more within that sector we're seeing a shift in the company from A to B.
All right. So now looking at this particular portfolio of mutual funds and most of these names that we've seen them initiating buying or sell calls, Shweta, all these calls would be a part of what kind of funds, if we have to just understand the funds allocation in terms of across large caps, be it large, mid or small cap. Most of these companies would be a part of large cap for mutual fund houses and their schemes.
So not necessarily that these are large cap funds where they are buying, because while the buying mainly seems to be that they are buying large cap companies, it actually would go in large cap funds, large and mid, flexi, uh, and I would also say to a certain extent the multi cap category. So these are four specific categories where you could see buying. Also, when we saw the Amphi data this time around that's come in, categories like large caps after a long time have seen good amount of flows coming in, as well as flexi and multi continue to get a decent pace of money. So while a lot of it could be towards the large cap fund because there was also net flows which are high in that category, but there are other few categories also which have seen some bit of that buying going in over there.
Uh, so this also means that this will stop the kind of volatility one might see in their mutual fund portfolio or in their particular fund or the scheme.
So it may not necessarily indicate that the volatility goes down for a fund, because what we are seeing is a routine activity of the fund managers. There is this perception that if you're buying large cap or if you have large caps may end up with a lesser volatility compared to mid and small. But when we look at the relative risk, which is if I compare the beta of a mid cap index to a large cap index, or a small cap specific, some companies they actually run at a zero point 0.4, zero point 0.5 beta to Nifty as well. So there may not necessarily be a correlation between if you're buying large cap, the volatility comes down of the portfolio, because you'll find enough and more stable companies even in the mid and small cap space. But yes, this is more of fund managers wanting to maintain their internal limits of market cap allocations that they want to maintain, and where there's a relative valuation attractiveness, because a lot of what they've been buying, when we delve deeper into what their PE valuations are compared to the industry average, a lot of them have a good potential upside.
All right, so this was like an overview of what the mutual fund houses are really banking on in terms of companies and their mutual fund portfolio. But last question to you, and this will be like a summing up question, because the changes in the mutual fund portfolio or the changes in the buy and sell call that mutual fund houses are initiating, Shweta, it doesn't apply to the investors holding those specific schemes, right?
Absolutely no. So it does not apply to the individual investors. And, I'll break it up into two parts. One, it Just because a fund manager is buying or selling something does not mean that you have to replicate that, because he has a certain objective in his mind, and that's how he's playing it out. He's balancing his portfolio. So when you just look at the buy and sell, you do not know the entire story, or how the entire picture looks like. You're just looking at one portion, so do not construe as you should also buy that and sell that in your portfolio. Second, it does not have, from another perspective, any buying or selling does not impact the client holding, or the client tax liabilities or any of that sort. So it either ways should not be construed.
Sure. All right. So that's a takeaway for all the investors. And mutual fund houses changing their allocation for funds doesn't mean that you also need to do the same as far as your allocation and exposure in a particular fund is concerned.